What's up, YouTube? Welcome back to another episode of How To Options. In this episode, we're going to be talking about the Greeks. Let's do it! Please like the video and please subscribe. Catch me every day after market close on the Smarter Gambling Show. Alright, so the Greeks measure different variables of an options contract. The values of the Greeks are theoretical, meaning they are based on mathematical models from your brokerage. Brokerage models are usually accurate and reliable. So, while there's a formula to calculate all this stuff yourself, you really don't need to. All the information is already going to be there from your brokerage account. The Greeks are helpful when evaluating the risk of an options play. And we're going to be talking about Delta, Gamma, Theta, and Vega, which are by far the four most important Greeks. Alright, let's start with Delta. Delta measures the change of an options price based on when the price in the underlying asset moves by $1. Delta is measured between negative 100 and 100 or negative 1 to 1. Calls have positive deltas and puts have negative deltas. A delta closer to negative 1 or 1 means more sensitivity to price movement. More out of the money contracts mean a lower delta because the option price will not move significantly unless it is closer to the strike price. Deep in the money contracts will be close to 1 or negative 1 and will trade like the stock. And here's a cool little trick I like to use. Delta can also be used as a tool to see the probability that the options contract will expire in or out of the money. So for example, we can see here the GME call option for January 21st, 2022 at the $240 strike price is currently trading for $9,430. And we see it has a delta of 0.69 or 69%. Nice. And we can see here on the other side, the same contract, GME, $240 strike, January 21st, 2022. That has a delta of negative 0.28 or 28%. This means that if you are buying the call, it has a 69% chance of finishing in the money by expiration, or if you're selling the contract, it has a 28% chance of finishing out of the money by expiration. Now, notice these values don't exactly make up 100%. 69 plus 28 is 97, so it's not exactly 100%, but it is close enough. Alright, now let's talk about Gamma. Gamma is derived from Delta. It measures how much Delta moves when the underlying asset moves by $1. Gamma is measured between 0 and 1 for calls and puts. There are no negative values like there are for Delta. Gamma is larger for at-the-money options and progressively decreases the further in or out of the money the contract goes. Gamma sensitivity exponentially increases as expiration nears. Alright, now let's talk about Theta. Theta measures the loss of extrinsic value per day. Theta increases for at-the-money contracts as expiration day approaches. It decreases for in and out of the money contracts as expiration day approaches. Theta remains relatively constant until 1 month to expiration. This is when IV crush or theta decay starts to take effect. Therefore, theta decay is good for sellers and bad for buyers. Theta values are always negative for long options and positive for short options. I use the Theta Gang strategy, which is basically just selling options and collecting premiums off of it. And we'll discuss that a little bit later. Okay, now let's talk about Vega and others. Vega measures the change of value in a contract due to a 1% move in implied volatility, or IVR. It decreases as the expiration day approaches. Vega affects calls more than it does puts. So Delta and Theta are by far the most important Greeks and will be used very often when assessing options contracts. Some minor Greeks include Charm, Lambda, Epsilon, Vama, Vera, Speed, Zama, Color, and Ultima. We're not going to talk about these because they're not really used that much, but if you'd like, go Go check those out for yourself. And that is how to use the Greeks when trading options. This does it for another episode of How to Options. Hope you guys enjoyed. Please like the video and please subscribe. Catch me every day after market close on the Smarter Gambling Show. I will see you guys in the next one. Peace out.